Welcome to the Jay Tyner Show, where we discuss all things wealth management and retirement planning. And as always, the goal of our team here at Semmax Financial Group is to help you focus more on your life and less on your money. Now, as a reminder, check with your current advisor, planner, CPA, and read our disclosure in the video description below. Subscribe to this channel if you want to stay up to date on all of our new content. And by the way, if you have questions or need a 15-minute free consultation, please visit semmax.com or call 336-856-0080.
Hello and welcome. My name is Matt. I'm joined by Larry, and today we're going to be talking about 10 things you should know before purchasing life insurance. Now, life insurance is something you can use for a number of different reasons, for a number of different ways. I think it's important to know those. But ultimately, life insurance is something that pays out at your passing, and I think it's important to put appropriate thought into it. Because unfortunately, or fortunately, depending on if you're an insurance salesman, it offers a commission. And usually when someone's getting a commission, they're going to have some kind of an opinion about what you should buy and why. No doubt. I think here are 10 things you should really be paying attention to before purchasing life insurance. Now, number one, I think you should review your insurance needs. I touched on that just briefly a moment ago, but when you're looking at life insurance, there's different reasons to have life insurance. There's different ways these policies work, and I think you need to know first and foremost, what do I need? What is the coverage I'm looking for? What am I trying to accomplish with this policy? Otherwise, you may find you spend a lot of money, you spend a lot of time and effort going through underwriting, you get a policy, and you realize this doesn't actually solve the need I was looking for. So start off by understanding and reviewing what are your insurance needs. What's number two?
Number two is decide how much coverage you're going to need. It kind of goes along with what you were talking about. Is there somebody that is financially dependent upon you? You know, so if you have a spouse, for example, you want to make sure that you have enough insurance to pay off the mortgage so that they don't have to worry about that going forward. The last thing that they need is financial difficulty when they're dealing with the emotional difficulty of losing you. So understand, kind of how much you're going to need by assessing who's dependent upon you, and then what kind of debt and responsibilities that you have, because you don't want to leave your loved one in a lurch.
That's a good point. Now, third would be to assess your current life insurance policy. Now, when you're assessing your current life insurance policy, it may be that you have a term policy that's coming due. And when you're assessing it, I would just start off by asking the question of, why do I have this? And do I still need it? Because you may realize your current policy's premiums are going up. You may realize I don't actually need this coverage anymore. But I would start off by looking at your current policies, pull all of them out, you and your spouse. It's a good time to do that. And just really assessing, what do we have currently? How does it work? And why do we have that?
Next one would be to compare the types of insurance available. Typically, there's two types. There's the term policy, which is based on a certain amount of time that you have the policy. It either pays out, you either pass during the term, or it just goes away. Mm-hmm. Or there's a cash value policy, a policy that kind of gains value as you go through life. And so look at those types and determine which one best suits your needs.
Yeah. So once you've settled on the type that you need, next here would be make sure you can afford the premium payments. The last thing you want to do is go in for an extremely high amount, have this amount that you're looking at and you're going, yeah, I can afford that just barely, as long as nothing goes wrong, right? And then you run into a situation where you're not able to fund the policy, it lapses, all of a sudden you no longer have coverage, then you're in a position where you ultimately need it. So I would really say take some time and do the math. Can you afford the initial premium? Can you afford the ongoing premium? And kind of circling back to that longer term picture, is this something that I can afford the premium indefinitely? Am I only paying for it for a fixed amount of time?
Right, and that kind of goes with the next one. Have an insurance agent help you evaluate the future of your policy.
Yeah.
How that's going to play out over the long term. The insurance agent's going to know best. So get the professional advice.
So if you're 30 years old and you're saying, hey, I've got a wife, I've got 2 little kids, we just got into this home, I have a car payment, you may want as high of a death benefit for as low of a premium, but you only need it for 20 years.
Yeah, that might not work.
Versus a whole life policy that could be totally different.
Exactly.
And an insurance agent's going to talk you through, this is what your needs really are, and this is how you can really pull it all together.
Exactly.
I like that. Now, here's one. Number 7, keep your current policy. Now, I would say this is key. Even if you're in a position where you're looking at changing policies or making an adjustment, you want to keep your current policy and do not drop your current policy until you have done a thorough understanding of the new policy and the one you have now. Replacing your insurance could be costly. Now, it may be to your benefit, but you don't want to just say, oh, I'm thinking about getting a new policy, I'm going to go ahead and stop paying this one now. Because you could go through underwriting, not get approved.
Right.
All right, so what next have we got?
You got to understand the renewal policies of the policy that you're getting. So understand how it works. If the premium goes up at every age, if they get to a certain age and they don't allow you to renew, because there are some policies out there like that. So it's very important to read the fine print and understand every aspect, but especially the renewal part.
Right. And then I would also say here, read your policy carefully. Now, this is something that whenever I help a client go into a policy, we actually take the time to go page by page through that entire contract. And I explain to them, what does this mean? Where is this at? Let's read through this thing together. And I've had people go, I don't really want to do that. I think it's important for you to read the policy. It's important for you to understand what's in here. This is a contract of adhesion. What that means is you did not personally put anything into that contract and say, excuse me, one moment here. I'm going to change this, and this, and let's write the contract that way. No, this is a contract that you are adhering to. You are agreeing to it. It is important for you to critically look and read and understand what is it that you're actually affixing your signature to and paying for.
All right. And going along with that, the last thing is to make sure you review that policy on a yearly basis. Make sure you're constantly looking at it. Make sure you're constantly understanding what's going on, because over a time period, they do change.
Right.
And so make sure you're reviewing that policy.
Yeah, I think that's key. And I've had some folks that go, well, wait a minute, I'm in retirement. I don't need a policy anymore. Well, maybe you don't for the same reason you did. Your home may be paid for, but when you're thinking about things, there's a way of transferring assets. Because remember, life insurance is going to be tax-free. So you might be looking at it and saying, maybe I should unwind some of that IRA, that taxable consequence, put it into a tax-free portfolio. You know, you utilize it in a different way. There's a wealth transfer aspect to it.
Exactly.
I would just say this: if you haven't done it, I would start with number 10. I think you hit the nail on the head. Pull it out, review what you have, and ask that question: why am I paying what I'm paying? Because what you may find is you've got a phenomenal deal. You may look at it and go, this is great. I couldn't do better if I tried. I hit it out of the park. If I'd known 10 years ago, this is amazing. I should have done twice this much. Or you may realize, I'm paying an awful lot for not a lot of benefit.
Right.
Another thing to keep in mind is there's some of these whole life policies, the cash value builds. If it has a fixed death benefit, yes, that cash value is building, but it may not be adding into that death benefit. Why are you continuing to pay that premium? Why don't you let that cash value pay for your premium? There's things you can do inside of your current contract, but it's really important to sit down with an advisor who understands these things that may be able to go over it with you. If you'd like to do that, you're welcome to do so. Feel free to reach out to our firm. We'd be glad to sit down and talk with you. You can reach us at our office number. That number is 336-856-0080. Thanks for watching. We hope you have a wonderful day. Take care.